Okay, guys, so we're halfway through the year. I just wanted to give you a quick update on how things have been going. It's really been a tale of two markets, so to speak. Market has really improved a lot over the end of last year, and that's just basically because fixed rate mortgages came down about 1%, 1.25%. Year over year stats are going to compare this to a really hot spring of last year. So it's going to kind of look like it's down year over year, but it's actually been a lot better since the end of last year. That being said, hold on, just make me smaller here. That being said, the number of properties in the market has really dramatically increased, and it's a multi-decade high currently. And in the end, we're just sort of left with this, I'm going to call it a K-shaped market, borrowing a phrase that we had in COVID, where parts of the market are really doing quite well and others are really struggling. And there's just sort of seems to be pockets of strength and weakness. We end up getting a lot of really confusing headlines, like this: sales down 60%, and then real estate prices are up 25%. How do we make sense of all of this? Well, we just really understand right now who's buying and who's selling and why, because this has really changed a lot in the past couple of years. And we just see, market is still rebalancing, and it's just different depending on the different area and the housing type, really. So when looking at our buyers, as I said, they really changed a lot in the last couple of years. First off, we've lost investors and speculators, and this was as much as 25% of all buyers out a few years ago. We've lost buyers at the lower end of income, the marginal buyer. We've also just seen a lot of people who are, just deferring a change. Market's volatile. I don't want to make a move right now. And that's, I think, just a normal reaction to a bit more volatility. And in the end, so we're just left with, primary use buyers. And I would also add, you've got some wealth. If you're buying right now, you've got good income or you've got some other assets. And behaviorally, these kind of people just act differently. So housing is about family and it's about lifestyle. It's not about, I need to make sure that the rent covers the mortgage, or, that it has to make 10% next year. And what's important ends up being, quality, location, neighborhood, safety, schools, all this stuff, which is very different than it was a few years ago. And let's not forget as well, like we've got some big demographic fundamentals pushing demand. Millennials are the biggest population group in Canada. They are entering or in peak earning years and are building families. Gen X, now has teenagers, and teenagers need more space. Boomers are retiring with a lot of wealth, but they're really not. They're very slow to downsize, and they're passing on that wealth. And at the same time, we've had a ton of immigration. So, talking about our sellers as well, there's certainly normal sellers that are out there, but we definitely have a new type of selling in the market, which is selling at a loss. And, you could look on social media or media. There's all sorts of great headlines like this. Social media loves this stuff, especially. And this is because of, over leveraged sellers. And we don't really have any way to, track this broadly, like find out the index of over leveraged sellers. But behaviorally, we can say a number of things. One, investors are most likely to sell due to higher interest costs. So as soon as the mortgage payment goes way above what you can get for rent, now you're paying $1,000, $2,000 a month for your investment. It's time to sell it. A homeowner is going to try to do anything they can to keep their home. They'll reduce spending, they'll eat out less, go to one car, get another job. But investors behaviorally are more likely to sell. Secondly, the previous sort of marginal buyer, the lower income, if you have no assets and now all of a sudden your mortgage payment is really high, you might be forced to actually sell. And that those types of buyers bought in a certain area before. And then finally, if you couldn't qualify at an A lender at a big bank, it probably also meant that you might be in trouble now. And there's definitely evidence of more stress in the private and alternative lending markets. So what does all this mean? Basically, right now for the market is there's a mismatch between what buyers want and what people are selling. And it's just created this pockets of strength and weakness in different elements of the market. And so what are those elements? Well, the first one is location. There's definitely a central versus suburb element to this. We have seen a return to office. So working remotely in North Oshawa is a lot different now than it was a few years ago. And also remember that some of those cheaper areas were where buyers chased affordability. So what's sort of hot right now? The high quality destination neighborhoods where everyone wants to live, good amenities, close to downtown, they're stable. They've always had long-term ownership. And to be honest, tight supply. And then what's not, there's your previous value areas, often suburbs, people chased affordability to buy there. And they also had a lot of new supply, areas where there was new housing built, where there was a lot of speculation as well. State of renovation, the cost of trades and materials really has skyrocketed over the past few years, and primary buyers don't want to take on a big reno. They don't have the cost for it. They want something that's turnkey. And we've lost all the buyers, not all the buyers, but speculators and flippers were often the people who bought up those houses that really needed a lot of work. And that segment of buyers is really quiet. And then finally, property type. So condos versus houses. Condos are a very slow moving market right now and not doing very well. And this honestly goes back to investors versus principal use buyers. There's definitely people who buy condos to live in, but the majority of investors purchased into the pre-construction pipeline, just largely because of the cost. And that's what everyone did. They bought a pre-construction condo. And now, so condos are very slow, and houses, especially in good areas, are moving. And I should also comment, like, a lot of those condos they're just not great. Like, there's a lot of bad condos out there. There's no other way to say it. Like, poor layouts, low floors, bad light. And they were bought because you could put a tenant in it because there's a housing crisis. But we just haven't built enough homes, right? Like, enough single family houses to meet the demand for families now. So condos are weak and houses definitely are not. If I had to rank sort of the worst to best in the market right now, the worst 100% is pre-construction, especially pre-construction still to close. So people who purchased years ago, we are seeing defaults. We're seeing selling at a loss. People can't close. If you can close because you can actually get a mortgage, you're closing below current value and closing a lot what you paid for. Next would be condos, and especially in the core of Toronto, they're just massively oversupplied compared to the demand. It's just a really slow market. It's tough to see sort of where value is. If you have something good in a good area and a good building, it'll still sell. But there's, most of what you see when you look at those overall stats of inventory, properties for sale, a lot of it is condos, especially downtown. Suburbs as well, single family. Again, this goes back to that the marginal buyers were chased affordability out there. There's a lot of FOMO, huge price gains in places like, Oshawa and Brampton and Vaughan. And there's also a lot of investors who chased out there just because of the price point. So it's moving a little bit, but it's definitely weaker. And then the best, is single family homes in really stable and high quality GTA areas, and it's not just downtown. It's not just beaches, Leslieville, High Park. There's some areas of Markham and Richmond Hill and, that are actually doing quite well. Probably the winner, if there is one, would be that sort of mid-range renovated house in one of these areas. We sold a great house in the beach last week, and it wasn't priced for a bidding war, and we got one anyways. So it's just quality really sells. Looking forward into the summer, it's going to be slow. it was not a really hot spring market, and you usually need that momentum to have a hot spring market. But I don't think that we should take a lot of signal from the market, and we'll have to see what happens in the fall. There hasn't been any notable boost in demand from the Bank of Canada rate cuts. As I mentioned, fixed rates were already lower anyways. Interestingly, I think sellers actually took the rate cut as a signal to list. So inventory seems like it went up, but we'll see how that plays out, and just expect this continual rebalancing between the over leveraged and these strong demographic trends. Finally, is it time to buy or sell? You know me, guys, like I don't like a canned response to a question like that. It might make sense for some. It might really not make sense for others. If you're thinking about it, give me a call and we'll figure it out. And that's it. Thanks, guys.